Hi, everyone, and welcome to the Bitwise monthly update for October 2018. My name's Matt Hougan, and I'm the Global Head of Research for Bitwise Asset Management. I'll be your host for today's webinar. I also have with me Phil Glazer from Bitwise's research team, who will join me for the Q&A portion of today's call. Speaking of that Q&A portion, Phil and I would like to make this webinar as interactive as possible. As such, you can ask questions of either of us using the Q&A widget on your webinar viewing browser. Please don't wait until the end of the session to ask your questions. Ask them as they occur to you. I'll collate the questions and answer as many as we can in the time allotted. I'd also note, let's not restrict questions to the topics I'm covering on the slides today. Phil and I are happy to answer any questions you might have about anything that's going on in crypto to the best of our abilities. So our goal with these monthly updates is to provide a comprehensive overview of what happened in crypto in the previous month, both what the market did and what stories drove those market moves. We try to look both forward and back and provide you with some insights that go well beyond the headlines. We also like to provide a brief update on what's happening at Bitwise as well. So in today's webinar, we'll cover the latest on the Bitwise 10 Private Index Fund and touch on four major stories that were important to crypto in the past month. The dramatic rise in XRP and the return of news-driven return dispersion in crypto prices. The New York Attorney General's report on crypto exchanges and what that means for the market going forward. The recent chorus of bullish predictions from crypto experts and what we're hearing from investors that we talk to in the field. And the emerging trend of major acquisitions in the crypto space and what that says for the future of large cap crypto assets. We'll wrap things up with Q&A and hope to get everything done within 30 minutes or less. With that, let's get started, beginning with a brief introduction to Bitwise for those of you who are not familiar with the firm. So Bitwise is a specialist crypto asset manager that launched the world's first crypto index fund in 2017. We're a team of 15 individuals with extensive backgrounds in software, research, and asset management, and backing from some of the leading venture capital firms and angel investors in the world. We combine deep expertise in crypto with decades of experience in asset management and indexing in an effort to provide institutional quality, rules-based crypto investment solutions to a wide array of investors. Our flagship fund, the Bitwise 10 Private Index Fund, sometimes called the S&P 500 of crypto, provides broad-based exposure to the 10 largest and most exciting crypto assets on the market. These 10 crypto assets typically represent approximately 80% of the total market capitalization of crypto, including the most liquid, investable, and institutionally oriented projects on the market today. The index is reconstituted monthly to ensure it stays up to date. Now, September was a quiet month for the Bitwise 10, which fell 1.3% on the month. But as with August, that 1.3% figure disguises what really happened, as September was actually a tale of 2 months. The crypto markets fell sharply to start the month, with the Bitwise 10 tumbling 16.3% in the first 11 days of trading, before it bottomed out and rose 17% to close almost flat for the month. That split month return actually brings us to the first major theme we want to focus on in this webinar, which was the spectacular rise of XRP, commonly known as Ripple. As you can see from this chart and the accompanying table, September was all about XRP, which posted an impressive 71% return. It was joined by Lumens and Monero in posting positive returns for the month. Lumens rose an impressive 16%, while Monero eked out a 0.48% rise. But XRP was the decision maker and stands out on this chart in a major way. XRP's strong returns stand out all the more given that 7 assets posted negative returns for the month. Ether continued its recent drubbing and fell 18%. Zcash tumbled 14%, EOS fell 11%. Bitcoin dropped more than 6%, significantly underperforming the index. Now, before we dissect XRP's rise, it's important to keep in mind a little terminology. XRP is a crypto asset that's associated with a firm called Ripple. A lot of people say Ripple when they mean XRP, but one is a company and the other is a crypto asset. Now, XRP's move was driven by the rumored and then subsequently confirmed launch of XRapid, a cross-border payment solution developed by Ripple that uses XRP as a bridge cryptocurrency to help move and settle money across borders in a rapid, low-cost manner. As this chart shows, the upward move in XRP started precisely when rumors of XRapid's launch were leaked to CNBC in the middle of the month. Cross-border payments is one of the biggest and most natural applications for crypto assets. It's an antiquated, slow, and costly system, and one that is ripe for disintermediation and disruption. Ripple, the company, has already been working on disrupting that market for international payments using blockchain technology. It has dozens or hundreds of pilot programs with leading banks already in the works that would replace traditional payment mechanisms with a blockchain solution. And it says that doing this can cut about 33% off the cost of international payments. XRapid is the next iteration in that product line, and it uses XRP as a bridge currency. Let's say, for instance, that you need to send some money to South Africa. Rather than routing cash through major money market banks in New York, Frankfurt, and Johannesburg, you could simply change your dollars into XRP, send XRP directly where it's going, and then convert XRP into Rand. It skips a number of steps, and Ripple says that it can save companies 60% over traditional methods of doing international payments. Now, there is a wide-ranging debate on what XRP's role as a bridge currency could mean for the price of XRP. Some think that companies holding XRP for brief periods of time will do effectively nothing whatsoever for the price, while others think that companies will build significant stores of XRP to keep on hand to facilitate payments, creating a natural holding base and boosting the value of the currency substantially. Either way, it's clear that the market believes the launch of XRapid was a significant positive development for XRP, and it rewarded it with that 71% boost. I note that the other top-performing crypto asset for the month, Lumens, also benefited from news around its use in international payments. Specifically, IBM launched a new product earlier in September called WorldWire, which uses Lumens and the related Stellar blockchain to, in its words, clear and settle cross-border payments in seconds, not days. While there was also additional news around Lumens, which we'll get to later, the IBM announcement was significant and a significant endorsement by a major company of the ability to use crypto to solve the cross-border payments problem. One final note, and as I've said before, the returns we experienced in September with a wide dispersion between the best and worst performing crypto asset in the Bitwise 10 is actually the norm for the crypto market. This is a periodic table that examines the returns of all 10 assets currently in the Bitwise 10 index over each of the past 12 months. We prepared this table on September 25th, so the September numbers are partial month numbers, but they still tell a story. Over this time period, the average monthly dispersion between the best and worst performing crypto asset in any given month was 144%. In nearly half the month covered, 6 out of 13 to be precise, we had split returns, with at least one crypto asset posting positive returns and at least one crypto asset posting negative returns, as we saw in September with the spread between XRP and Ether. Only once in these 13 months did the top performing crypto asset repeat for 2 months in a row as the best performing asset. Now, in healthy markets, the returns of different crypto assets are often driven by news that's specific to those assets rather than overall market sentiment. That's what we saw in September with the strong returns by XRP and Lumens, and we see that as a positive sign for the markets overall. The high variability of returns on a month-on-month basis is one of the reasons we believe a broad-based index approach is an appealing strategy for investing in the crypto markets. With that, let's turn to the second major topic of the month, the increasing regulatory scrutiny of the crypto exchange ecosystem. Earlier this month, the New York Attorney General, or earlier this year rather, the New York Attorney General sent out requests to 13 of the most established crypto asset exchanges, asking for voluntary feedback on questions related to fees, security, market surveillance, anti-money laundering protocols, conflicts of interest, insurance uptime, essentially everything. They wanted to know what was going on in the crypto exchange ecosystem. 9 exchanges immediately complied, and others provided partial information. We really think the report is worth reading in its entirety, but the summary is that the New York Attorney General found that many exchanges lack adequate protections against conflicts of interest, potentially manipulative trading programs. They have uneven protection of customer assets and inadequate market surveillance capabilities. While the report is at times overtly negative and occasionally incorrect in its findings, it does highlight some very legitimate concerns, and it does a particularly good job at scorecarding different exchanges for how they perform on these key measures of quality. In our view, the most important part of the report is its focus on how exchanges police against abusive trading activities. It notes that 6 of the 10 exchanges it looked at lacked a formal policy to prevent manipulative trading. Many also lacked some relatively simple protections, such as limiting the ability of individuals to access an exchange via a VPN, which is a way that some people can use to disguise coordinated trading activity between multiple accounts. Now, interestingly, in the weeks after the report was released, we've already seen exchanges like Poloniex take steps to fine-tune and improve their processes. Specifically, Poloniex announced today that it was eliminating margin trading, one of the risks called out in the Attorney General's report. We believe that increased regulatory focus on the exchange ecosystem is an unfettered positive for crypto. Our view is there's a regulatory underhang that's slowing the entry of institutional players into this space, and that the sooner it's cleared up, the sooner more institutional investors will move in. So we applaud the news out of Poloniex. We applaud the Attorney General's report, and we applaud news that came out earlier today suggesting that TD Ameritrade is investing in a new crypto exchange. The crypto ecosystem is currently in somewhat of an awkward teenage years with rapidly maturing companies, and the sooner it emerges into full-form adulthood with good customer controls, I think the better off we'll all be. It is worth noting that we at Bitwise take a number of steps to limit the influence of less well-regulated exchanges on our indexes and to protect investors from certain risks. For starters, we almost exclusively trade in over-the-counter markets with well-established institutional market makers, which from a practical perspective eliminates most of the day-to-day concerns raised in the Attorney General's report for our investment purposes. But more broadly, we have a series of rules in our index methodology, which is all available online, that exclude exchanges that don't meet our quality standards, including eliminating exchanges that are underregulated, exchanges that allow or encourage artificial volume, exchanges with significant stability or withdrawal issues. We do and have spent an enormous amount of time investigating exchange reliability, and we'd be happy to talk at depth with anyone who's interested, or if you have specific questions either about the New York Attorney General's report or our view of the crypto exchange ecosystem. In the time that's left, I did want to touch on 2 other big themes that captured our attention in September. The first was a rash of extremely bullish predictions from leading experts in the crypto space that came out one after another. This included a great report from the Satis Group, which put out a report calling for Bitcoin to hit $96,000 in 5 years. A call from Fundstrat's Tom Lee, who said Ethereum will reverse its recent pullback and rally to more than $1,900 by year end. Tim Draper, who called for an $80 trillion crypto market in 15 years. Mike Novogratz, who said that crypto had hit a technical bottom, although he subsequently said that he didn't think Bitcoin would rise over about $9,500 this year. And the CEO of Binance, who said he still expects crypto to deliver 1,000x returns over time. Now, we're not going to go into any one of these particular predictions right now, although you can find them all online. I think they all have elements of truth and elements of hyperbole to them. But I did find the timing of these announcements is just interesting, as they coincide with a pretty significant change in the tone of conversations with investors in recent months. I've spent much of the past few weeks attending family office-oriented conferences and have been speaking regularly with family offices, RIAs, and institutional investors. And while I think these investors were intellectually curious about crypto earlier in the year, the rapid pullback in prices, following January had them a little spooked, and many were on the sidelines. But recently, with prices stabilizing, we've seen potential clients take on a much more aggressive footing. And I think the continued price stability is emboldening both pundits and some of those investors who are asking themselves if now is the right time to get into crypto. So it definitely lines up with the conversations we're having, seeing all these bullish predictions come out recently. The last topic I wanted to cover, and it's actually one of the most important ones, is the rise of acquisitions by companies associated with large cap crypto assets. We've seen 2 such acquisitions in recent months, and we think they're really telling. So Tron, an emerging crypto asset that's currently the 12th largest in the world by inflation-adjusted market cap, acquired BitTorrent, a decentralized streaming service with more than 100 million users worldwide in July. And the deal instantly gave Tron the largest installed base of users in the crypto ecosystem. Stellar, for its part, or rather Lightyear.io, which is a for-profit company associated with the Stellar blockchain and its related crypto asset Lumens, acquired Chain, which is the leading provider of private blockchain, in September for a reported $200 million. Stellar is emerging as a blockchain of choice for corporate users, and we think this deal with Chain only strengthens that position. Chain has built blockchain projects for Visa, Citigroup, NASDAQ, and others. The purchases are important because they're a reminder of the reflexivity present in the crypto space. Lightyear.io was able to purchase Chain because people think the Stellar blockchain will be valuable in the future, making Lumens a valuable asset. Simultaneously, the purchase of Chain raises the likelihood, in our view, that the Stellar blockchain will in fact be valuable in the future, creating that nice reflexivity. The same is true of the Tron deal. So we actually expect to see more of this activity in the coming months and years. Many large cap crypto assets are sitting on truly substantial treasury stores, which gives them real financial muscle that they can put to work building the ecosystem that surrounds their specific asset. Now, some people view these centralized stores of value as a risk, and in some ways they can be, as they represent a potentially large store of liquidity that could be released onto the market at any time. But used properly, they can also have a deeply significant impact on fostering the ecosystem surrounding crypto assets and are a major competitive moat that large cap crypto assets can move to keep smaller crypto assets in bay. Our advice is to watch this space and expect more developments in the future. So all in all, it was a good month for crypto. I think the developments were on balance, strongly positive for the month, and it was great to see the market rewarding asset-specific news. There's an emerging cautious optimism among crypto investors we speak with, and it'll be interesting to see how both the news and the markets evolve in the months to come. With that, here are a few disclosures that we have to show, and now we can turn it over to audience questions. I'd remind you guys in the audience, if you want to ask a question using the Q&A widget on your webinar viewing browser, just type it in. We have about 12 minutes left, and we'll run through as many of those questions as we can. I do want to bring Phil into the conversation. Phil spends his day deep in research mode into the crypto ecosystem, and he's a great person to answer these questions. So Phil, my first question from the audience is how significant is the XRapid announcement, and how rapid do you think adoption of the product will be by the broader financial ecosystem?
Thank you, Matt, for the introduction and for the question. I think that it's difficult to say now, initially, what the future impact will be, but I personally view it as something that's very exciting. This will be the first time that Ripple, the company, rolls out technology that is live with financial firms. They're starting with 3 financial firms that primarily focus on money transmittance to emerging markets. And it's exciting because, as Ripple makes the case, this would provide a competitive advantage to businesses that use the technology. So in terms of significance, we'll see how effective XRapid using XRP, the cryptocurrency, is for these businesses. But it would be reasonable to assume that if XRapid can deliver this competitive advantage and use case, then we should expect that others will soon follow.
Yeah, it is nice to see real world use cases, and I saw an echo of it in the IBM announcement with Lumens. It does seem like this is one of the first places that crypto assets will penetrate significant real world use. The question that follows, which we mentioned briefly in the slides, was why will XRP have any value if it's only used sort of instantaneously as a bridge currency and only held by people for seconds or hours? This is something that the Status Group brought up in their report, which was bearish on XRP's value for this very reason.
Yeah, that is a fascinating question. And as you alluded to earlier in the presentation, it will be interesting to see how businesses evolve and think about XRP. It's possible to imagine one scenario in which businesses only hold XRP as they need it. So it's held as an as needed basis, almost like working capital, and therefore minimized in the holding period. Or it's also possible to imagine that these businesses will know that XRP will be in need in the future. It will be deeply integrated into how they operate as a business, and they will see value in building up stores of XRP for themselves to provide future certainty. Almost someone would go out and sign a futures contract for a commodity. So it'd be almost guaranteeing that they'll have access to this commodity that is fixed, and they'll end up holding it for a longer period of time. So we'll see how that emerges as more firms use XRP.
Yeah, I think that's the right approach. One funny thing I find about it is such a polarizing asset. People either think, it will be worth zero or it'll be worth everything. And I think that nuanced view of we just don't know. It depends on how companies ultimately use it in this kind of scenario is probably the most accurate. Let's
and
take
if I could add
on
a little bit onto that one, I would say that it's also to be seen what the other use cases for XRP are. Ripple's working on other projects as well, and it's possible that some of this reflexivity that you've seen with Stellar and with Tron will exhibit itself here with Ripple as well, and they'll make an acquisition that expands how XRP may be used.
Yeah, I think that's probably even likely in the size of their treasury store. It's the kind of thing they should be doing. Let's pivot a little bit and talk about the New York Attorney General's report. Do you think that helps or hinders the prospects for a crypto ETF? A lot of people waiting for a crypto ETF to launch. Do you think the NYAG made that more likely, less likely, or what?
Overall, I would echo the tone that you hit earlier in the presentation about it being important that the industry move forward, that the exchanges recognize where their shortcomings are and make the necessary adjustments to evolve crypto into an adult ecosystem from where it is now, as you characterize it, in the teenage years. So I think in the short term, the report may have come as a bit of a surprise to some people who are involved who didn't realize maybe that some of the exchanges that are well known and familiar don't operate with airtight policies. However, I think it's also worth noting that the report did call out that there were a series of exchanges that largely do things in a very proper way that follows the law and is up to the standards that we would expect for more traditional markets like the U.S. stock market. So I think in the short term, I would characterize it as the impression being slightly negative, but over the long term, I think it's very important. Fortunately, the report gives a grading system and a table, and it allows exchanges to see very clearly where they need to go and where they need to improve to get to where crypto needs to be to support something like a crypto ETF. So overall, I think it's positive.
Yeah, I think that's right. I think it is interesting. We're already seeing, although Poloniex didn't say this was the reason that they eliminated margin lending. It was called out in the report. It's interesting to see that sort of the most forward-thinking exchanges are already responding to this, which I think is the right approach. I know you were digging in yesterday into the TD Ameritrade announcement on the exchange front. What can you tell us about their investment in a new crypto exchange?
Yeah, it's very exciting. TD Ameritrade has been interested and involved in crypto since at least 2013, as far as I know. In 2013, they've been running mining operations, and they've engaged with clients in discussions about where the opportunities are in crypto. And I think it's very positive. It's possible that they've been working on this for much longer, but I think they've also likely recognized that a key thing that the ecosystem really needs is an exchange that operates properly and does things the right way and is built for the long term. So seeing the brand of a company like TD Ameritrade stepping in and taking an active role in building out the infrastructure that's needed for the ecosystem to succeed is very exciting and very positive. And I think it ties in well to the past question about the New York Attorney General's report on exchanges. I think it's fantastic that there will be an alternative that does things the right way from day one.
Absolutely. It looks like we have just one last question, which means we will be able to wrap up on time. A lot of people looking forward to the fourth quarter. Some thoughts, as we showed earlier, some bullish predictions by noted folks. Is the fourth quarter, and I know you've done some work on this, is the fourth quarter traditionally a strong quarter for the crypto market, or is there no seasonality in crypto that we can find?
Yeah, it's a good question. And to preface, obviously no guarantees of future performance, versus past patterns, but historically, the fourth quarter has been fantastic for crypto. It's difficult to speculate on why this might be, but in 2017, the fourth quarter saw total crypto market cap increase about 300%. In 2016, it saw total crypto market cap increase about 25%, and in 2015, increased about 75%. So it's hard to say if this is just the time of the year when people reflect and look forward to the next year and realize what may be coming on the horizon, or there's some other factor at play. But historically, it certainly has been the case that the fourth quarter has been very strong for crypto. And it seems like there are pieces that are coming together for the ecosystem that might support a positive development for the fourth quarter, but no promises, and we'll see.
We will see. All right, well, that does it for this month's update from Bitwise. Thanks, everyone, for dialing in. We will be back next month with a look at what happened in October. Feel free to write in if you have any questions about the crypto market you want answered. Phil and I would love to answer those for you. Just send us an email, matt@bitwiseinvestments.com or phil@bitwiseinvestments.com. For now, have a great rest of your day and a great rest of your week, and talk to you all again in a month's time. Thanks so much.